Evan Vucci/Associated Press asked Thursday about whether the Republican tax plan would cut taxes on the wealthy. Top White House economic advisor Gary Cohn said he didn't think Americans would care what happened to other people's taxes, they would care about getting a tax cut for themselves. Cohn said a typical American family making around $100,000 would get a tax break of about $1,000. If we allow a family to keep another $1,000 of their income, what does that mean? He asked. They can renovate their kitchen, they can buy a new car, they can take a family vacation, they can increase their lifestyle. So, about that. While there are still a lot of details to be filled in, the information we have available suggests the new Republican tax proposal would raise income taxes on many families who make just a bit more than the national average. I'm going to lay out below one such typical tax situation. Meet Ann and Bob Smith. Ann and Bob don't have a weird, outlier financial situation. They own a home with a mortgage, they have 2 kids, they pay income tax in a state with moderate tax rates, they give to charity in an amount proportionate to their income. They take tax deductions accordingly. And Trump's massive tax cut would actually appear to increase their tax burden by about $600. It's hard enough to buy a car for $1,000. Ann and Bob definitely won't be able to buy one for $600. Let's do Ann and Bob's taxes. Ann and Bob both work, and they have $120,000 a year of salary income. This income is comfortable, but it's not that far above average for a nuclear family, according to Pew. The median income in 2015 for a family where both parents work and at least one child lives at home was $102,400. Ann and Bob are not the sort of taxpayers who are usually targeted for a tax increase, especially as part of a tax plan that cuts taxes overall. Now, let's flesh out their financial situation. Their home is worth $420,000, or 3.5 times their income. They have a mortgage balance of $252,000, 60% of their home's value. This year, they will pay $8,636 in interest on the mortgage. They pay state income taxes of $4,800, which is 4% of their income, and property taxes of $4,620, which is 1.1% of their home's value. They give $3,000 to charity, which is 2.5% of their income. All of these deduction-related figures are close to the national average for a family of this type. Using the current tax code, Ann and Bob would claim 4 personal exemptions, 2 for themselves and 1 for each of the kids, totaling $16,200, and they would deduct their state income taxes, property taxes, mortgage interest, and charitable contributions, which total $21,056. These deductions would leave Ann and Bob with a taxable income of $82,744, yielding tax before credits of $12,163. Then, they would get a child tax credit of $1,500. This credit is normally $1,000 per child, but because the credit is phased out for families who make more than $110,000, Ann and Bob only get to take part of it. All told, Ann and Bob would have a federal income tax bill under current laws of $10,663. They're in the 25% income tax bracket, but lower brackets and deductions and credits mean they only pay 8.9% of their income in federal income tax. Here's a look. Sky Gould/Business Insider figuring out how to apply the GOP tax framework to Ann and Bob. The tax plan announced on Wednesday isn't legislation, it's just a framework. So we don't have enough detail to say for sure how much anyone's tax bill would be. But there is enough detail to make pretty good guesses, as groups like the Committee for a Responsible Federal Budget, CRFB, have done. What detail have seen does not look great for Ann and Bob. The Republican proposal involves tax brackets, 12%, 25%, and 35%, but it doesn't say what incomes those rates will apply to. I assume, as CRFB assumes, the bracket thresholds will align with those in Trump's tax plan from the campaign, 25% starting at $75,000, and 35% starting at $225,000, for married couples. Remember the $16,200 in personal exemptions Ann and Bob get to take on their taxes now? Those exemptions, $4,050 for the taxpayer, his or her spouse, and each dependent, would be eliminated in the GOP framework. That's supposed to be offset at least in part by a higher child tax credit, but the framework doesn't say how much higher it will be. CRFP assumed the increase would be $500 per child, since that's what Paul Ryan proposed to offset the elimination of dependent exemptions in his Better Way plan last year. I adopt this assumption. Finally, the framework also says the tax plan would adjust the income limits on the child tax credit. This is good news for Ann and Bob. I adopt CRFP's assumption that Republicans will propose, as they have in the past, to raise the income limit by enough so they will get to take the entire credit, whatever it is. J. Scott Applewhite/Associated Press. So, with those assumptions made, let's do Ann and Bob's taxes under